Hey y'all, how are you doing? Tonight is 2022 March 24th, and I am about to talk about stock market tonight. Okay, let's see what we have. We've got upside and downside, both in general, and we got 2% up by Tesla, and what else do we have? And hmm, Adobe and skills. Hmm. Let's look at some of the interesting articles. Is PayPal stock a buy right now after hitting a 52-week low? U.S. core capital goods orders fall in February. New jobless claims fall too. It's the beginning of the annual globalization, says BlackRock's Larry Fink and Octree's Howard Marks. Why the stock market isn't getting smoked even as Federal Reserve signals it's ready to surprise interest rate hikes. Oppenheimer predicts over 90% rally for these two stocks. These are extraordinary times for stocks. How to profit from the fear. Russia's strategy to salvage the stock market. Kathy Wood watch art buys e-commerce and biotech sales payments. Kramer's Mad Money recap. March 23rd. Tip ranks. Analysts with great track records are recommending these three stocks. Hmm. Russian stock market rises after closing for a month. The way people invest in real estate has changed. What this new strategy means for investors. War in Ukraine forces European bulls to unwind bets. These are the five best stocks to buy and watch now. Mm. Shell to invest up to 25 billion in UK energy after cutting ties with Russia. Three high growth stocks hitting fresh 52-week highs. Apple, Tesla, and 98 other growth stocks that are getting their groove back. How do private equity real estate investments stack up against REITs? Investor Bill Miller, good stocks, bargains available. Mhm. Russia stocks jump as trade resumes after month-long break. Three top S&P 500 stock market gainers today. Energy dominate as Adobe dives. Prime to win in the AI space, but valuation is running hot, says analyst. The difference between active and passive investing. Okay, I picked a few articles tonight, and let's look at it one by one, and let's come up with real assets. Okay, real knowledge. PayPal is the largest digital platform that provides money transfer services. The fast growing company remains one of the high profile stocks in today's stock market. But is PayPal stock a buy in the current stock market rally? PayPal stock fundamental analysis, a strong track record. PayPal boasts a consistent track record of earnings and sales growth. Stretching back to at least 2010, in that year it earned a mere 29 cents per share. In 2019, the company reported EPS of $2.96 per share. For 2020, the firm's earnings grew 31% to $3.88 a share. In 2021, the company's EPS grew as a result of the company's fundamental strength. PayPal's EPS rating is an 83 out of the highest possible 99. The EPS rating measures the company's ability to grow profits year over year. EPS rating using the most recent 2 quarters in the past 3 to 5 years of earnings growth. The SMR rating, meanwhile, highlights the company's sales, profit margins, and returns on equity. Such metric offers significant insight into a company's fundamental strength. Driven by PayPal's double-digit sales growth in recent quarters, 24% annual pre-tax margin, and 26% annual ROE in 2021, the SMR rating is an A. According to the IBD stock checkup, PayPal stock shows a weak 44 out of a perfect 99 IBD composite rating. The composite rating helps investors easily measure stock's fundamental and technical metrics. PayPal reported its fourth quarter earnings results on February 1st. The company reported fourth quarter earnings that fell short of expectations, while total payment volume also came in below estimate, resulting in a 24.6% plunge in PayPal share on February 2nd. PayPal stock news: PayPal continues to battle what block in the cryptocurrency space. The two payment companies are marketing apps that let shoppers get discounts, make installments, and buy cryptocurrencies. PayPal's Venmo and the Square Cash App started off as person-to-person money transfer services for family members and friends. Now they've evolved into broad consumer financial services apps, fueling growth for these leaders in the burgeoning field of digital payments. In the late 2020, PayPal launched a cryptocurrency trading service, allowing clients to buy and sell Bitcoin. In addition, PayPal customers are able to use cryptocurrencies. Customers are able to use cryptocurrencies to shop at the 28 million merchants on its network, which started in 2021. On April 20, 2021, PayPal announced crypto on Venmo. The new features allow customers to use these three types of cryptocurrency: push, Bitcoin, Cash, to view crypto trends and make transactions. On September 8th, PayPal announced a $2.7 million deal to buy Payday, a Japanese payment platform for buy now, pay later financing plans. Buy now, pay later financing plans. It is not pursuing an acquisition of Pinterest at this time. According to Bloomberg, PayPal had discussed acquiring the company for a potential price of around $70 a share. dropped almost 2% Wednesday, trading at 116.05. On March 8th, the stock hit a 52-week low at 2092.25. PayPal triggered the 7.8% loss rule from its 296.11 buy point in the cup with handle amid sharp loss in August, according to IBD Market Smith chart analysis. So the stock is not a buy right now. There is no new buy point at this time, with the stock market uh more than 6% off its 52-week high. For more leading stocks and approaching buy points, check out these IBD stock list. It's a bit vague here. PayPal. These are two standouts in their respective industries. Both companies are highly profitable and have lots of room to grow. They have underperformed the market recently, but could be bargains for patient investors. Has taken quite a beating recently, with shares down by more than 60% from their 2021 high. And to be fair, there are some good reasons for the decline. PayPal's 2021 user growth was a major disappointment, and the company's forward guidance and management commitments indicate that some of the company's previously stated long-term user growth targets might be a bit unrealistic. Uh, don't lose sight of the fact that PayPal is a massively profitable fintech leader. PayPal's ecosystem saw $1.25 trillion in total payment volume, 33% higher than in 2020. The ecosystem saw $1.25 trillion total payment volume, $1.25 trillion in total payment volume, 30% higher than in 2020. And generated over $25 billion in revenue. $25 billion in revenue. And while user growth might not have been what the market was looking for, 426 million active accounts is an extremely impressive number. PayPal generated a staggering $5.4 billion in free cash flow last year and is expecting even more this year, giving the company excellent financial flexibility to make acquisitions, reinvest in the business, or return capital to shareholders. And while user growth might be a bit sluggish for the first time being, PayPal is still in the relatively early stages of monetizing its user base, especially its Venmo users. So the company could keep its earnings growth strong for years to come. Mm. A thorough pharma and Alpine Immune Sciences. Kathy will watch or buys e-commerce and biotech sales payments. Bulked up on biotech stocks. All these stocks were bought and sold um, have slumped over the past 6 months. Hmm. Investment manager Kathy Wood, chief executive of investment management, was active buying and selling big name technology stocks on Monday. Hmm. She also continued her foray into the biotechnology sector. Fintech Innovation ETF bought 332,635 shares of e-commerce stock was Shopify. The stock has dropped 52% over the past 6 months. Twilio, Umbrella, Pasir Pharmaceuticals, and Ashwarn. Hoshin Technologies, a company specializing in green refrigerant products. This is a specialty niche, but an important one. Air conditioning tech is ubiquitous, and the coolants used in it are notorious polluters. Hmm. Investor Bill Muller, Gustav Borg is available. He cites a strong economy, low unemployment, rising wages, and the beginning of Fed interest rate increases. Chief Investment Officer of Miller Value Partners says there are a lot of unanswerable questions in the stock market. No one knows when the Russia-Ukraine war will end, how high inflation will go, and how many times the Federal Reserve will raise interest rates. No one knows whether the stock market rally they began last week will continue. Has sleezed 6.2% year to date, but the market rebounded 8% from March 14 through March 21st. While we don't know where the market is headed, uh, Miller said he's confident some stocks are good buys, with stocks still down year to date. I believe there are many good values in the market, he said. Miller points to a strong U.S. economy with low unemployment, plentiful jobs, rising wages, the strongest real growth in many years, and a Fed that has begun to raise rates. The unemployment rate totaled 3.8% in February. Average hourly earnings climbed 5.1% the 12 months through February. And the economy grew 5.7% last year. Hmm. Meanwhile, the Federal Reserve lifted its federal funds target rate by 25 basis points March 16. Given all that, it's likely that a shift has begun in market leadership to value stocks from growth stocks. which dominated for the last 10 years, Miller said. When the government is easy and says they want to help the market, financials which mostly benefit from the rising rates. Active and passive investing on overview. Whenever there is a discussion about active or passive investing, it can pretty quickly turn into heated debate because investors and wealth managers tend to strongly favor one strategy over the other. While passive interesting investing is more popular among investors, there are arguments to be made for the benefits of active investing as well. Hmm. How would you? While passive investing is more popular among investors, there are arguments to be made for the benefit of active investing as well. Active investing requires a hands on approach, typically by a portfolio manager or other so called active participant. Passive investing involves less buying and selling, and often results in investors buying index funds or other mutual funds. Although both styles of investing are beneficial, passive investments have garnered more investment flows than active investments. Mm. Passive investments have earned more money than active investments. Active investing has become more popular than it has in several years, particularly during market uh, upheavals. Active investing, as its name implies, takes a hands-on approach and requires someone act in the role of a portfolio manager. The goal of active money management is to beat the stock market's average returns. Beat the stock market's average returns and take full advantage of short-term price fluctuations. It involves a much deeper analysis and the expertise to know when to pivot into or out of a particular stock, bond, or any asset. A portfolio manager usually oversees a team of analysts who look at qualitative and quantitative factors, then gaze into their crystal balls to try to determine where and when their price will change. Active investing requires confidence that whoever is investing the portfolio will know exactly the right time to buy or sell. Successful active investment management requires being right more often than wrong. If you're a passive investor, you invest for the long hour. Passive investors limit the amount of buying and selling within their portfolios, making this a very cost effective way to invest. The strategy requires a buy and hold mentality. That means resisting the temptations to react or anticipate the stock market's every next move. The prime example of a passive approach is to buy an index fund that follows one of the major indices like the S&P 500 or Dow Jones Industrial Average. Whenever these indices switch up their constituents, the index funds that follow them automatically switch up their holdings by selling the stock that's leaving and buying the stock that's becoming part of the index. This is why it's such a big deal when a company becomes big enough to be included in one of the major indices. It guarantees that stock will become a core holding in thousands of major funds. In their investment strategies and portfolio management program, Wharton faculty teaches about the strengths and weaknesses of passive and active investing. and blah blah blah. And what's the point? I'll buy right now, Paladin stock. The long-term outlook for Paladin remains intriguing, but the technical picture is weak. Bottom line, Paladin stock is not a buy right now. The stock has a long way to go to prove itself. Poor quarter first earnings send Paladin stock tumbling below key technical levels. The fundamental and technical picture has only worsened with the equipment production halts. A takeover deal by Amazon, Nike, or another suitor could push up Paladin stock, which is already getting a big pop. But if a deal doesn't come true, Paladin shares could give up all those gains and more. Investors would do well to wait and see if Paladin can sustain an upward move and build a proper base before thinking about buying. Blah, blah, blah. Okay. Now let's go back to the one that I invested. I'm going to skip on terminology section, and we are going to look at each company one by one. And tomorrow is the day where I get my income. I'll probably buy Twitter and Block, Netflix, and what else? Shopify. Let's look at the chart of the EPIM systems and see. Okay, this is a good one too. Okay, there you go. It's a good one. Company performance, competitor dominant top companies can't keep up. Is growth, profit margins over the course of several years, product uniqueness, competitive advantage. Let's look at the company with these perspectives. Okay. First, company performance. Company performance on Market Libre. Quarter 2021 financial results. Okay, it's way more complicated than I had thought. Competitor, dominant competitor of Market Libre. Competitor of Market Libre competitors Flex host online commerce platforms. Employees, Twitter followers. Craft. Mercado Libre has got competitors Flex, Source, Age, Gearflow, Facility. This company developing a social commerce marketplace. Company providing an e-commerce platform appeal to support and represent a list of construction equipment rental companies and businesses that make up the construction equipment industry. They develops an e-commerce platform establishing online sellers to start, grow, and scale their businesses. Okay, it's getting late tonight, so this is it for today. So I'll be seeing you guys tomorrow or the day after tomorrow, okay? Bye bye.